things that can affect your mortgage rate. Now, most of us look at this credit score, we look about the credit report and look at several other kind of things, but we don't consider one thing that can affect your mortgage interest massively. And what do I mean by this? It is the loan to value, LTV. You see, the loan to value is one thing that can affect how much you pay monthly for your mortgage, and it can affect your interest rate. Let's take, for instance, if me and you were going for the same property of 250 or 300, and I'm bringing 20% and you are bringing 5%, there will be a very massive difference to what we'll be paying every month. And also the interest rate, there will be a massive difference. Remember, in the mortgage game, we are looking forward to pay less of the interest, and we are also looking forward to use it to build wealth. I'm not saying if you have 5%, you shouldn't put 5% down. I'm just only saying if you have the means to put more to take it to the next band, it is better than just putting it on 5%. Now, understand that don't you ever put your deposit in the middle of any band. What do I mean by this? Let's say, for instance, you have 5%, and your 5%, for example, is 10,000, and now you want to go and put 12,000. That extra 2,000 is a waste. There's no need to do that. Take it to the next band. If the next band that will make it 15% will be 15,000, put the 15,000 instead. Don't put in between any band. Make it either 5 or 10 or 15 or 20. Now, many people are asking, Henry, what is the best interest rate? For me, 10% to 15% is good. The difference between 15% to 20% is not much. So there's no point of you adding extra 5% when you will not knock down lots of interest out of your mortgage. And also the difference between 10 to 15 is still much. 10 is a very good deposit. 5% is not a bad deposit, but then there are so many risks around there. But if that is what you have to step into the mortgage ladder, it is good. If you have 5% to step into the mortgage ladder, it is good. The purpose of this video is to tell you that loan to value is what can affect your interest rate and also affect the monthly payment. And it will also determine how soon you refinance. Take, for instance, if you have only 5% down, even if you wait for the next 5 years, you will struggle to refinance because of why your equity will not be much. But if you have up to 15%, in 2 years, you'll be able to refinance because of why your equity is much in the property. And again, you would have paid more. Look into things like this. If you have 5%, it is good. If you have 10%, it is good. If you have 15%, it is good. But don't let your deposit be in between any of the band. It is either 5%, 10%, 15%. Don't put any extra money when it will not take you to the next band. If you have 9,000 and what will take you to 10% is 10,000, look for a way to add that 1,000 to take you to the 10,000. That way you will knock down a lot of interest and your monthly payment will be less. Let me know what you think in the comment section. See you in the next one, guys. Thank you.